Hi guys, this is Mark Shawson, the Pattern Trader. I'd just like to read for you real quick a couple of interesting reviews that just percolated on our review website. The first one was from Richard. He said, I really enjoy how Mark, the Pattern Trader, goes deep into the chart and gives you a real insight that goes well beyond all the technical crap and focuses on price action. So that was interesting. I've started to look at charts now without all the noise of technical indicators, and it really helps. I would highly recommend this service to help you become an ultimate trader. So thanks for that, Richard. And then this was from Kirsten. Thanks a lot for your teaching. For the first time, I met somebody who has real knowledge in this complicated area. My only regret is that I did not meet you before all of those who scammed me. So sorry about all of those bad actors, Kirsten. Yes, there are a lot of bad actors in this industry. I do try and wave the white flag and try and be very transparent and ethical. I don't try. That is my commitment. So what I wanted to talk to you today was the price of gold is crashing. Counterintuitively, you know, the Fed has been flooding the market with all this money. You've heard all of this talk, how the Fed is going to inflate the bubble, that you're going to get hyperinflation. And this is why I caution you guys not to trade the news, not to trade on information. Price is the only news. Price is a discounting mechanism. And the price of gold is about $20 from yesterday's close, down $20. Now, this was the theme of my weekly newsletter that I sent out on Sunday. And the title of the newsletter was, Is the Party Over for Gold? Now, this wasn't a rhetorical question. This is really what I think. And the reason I do is based on several technical indicators, starting with last week's price action, where the price of gold shot up to a multi-year high, just a hair below the $1,750 level. But by the end of the week, gold closed at about $1,682, so about $70 off the highs. So despite the fact that gold soared to multi-year highs, by the end of the week, the sellers were in control. Now, it wasn't just this key reversal bar, and when I talk about a key reversal is when we make a new weekly high and close on the low. So I wasn't just looking at this weekly reversal bar in a vacuum. I was looking at where this reversal bar occurred. And I'm going to show you a chart in just a moment where you can see this weekly reversal was right at the high point of the apex of a reverse triangle price pattern that is has been forming in gold on the weekly charts for quite some time. So based on the reversal price action last week, based on this reverse triangle setup and the follow-through price action, I do think that we're going to see lower gold prices in the short term. Now, I advised our members on Sunday to try and catch a rally in gold. So remember, the weekly close was around the $1,682 area. But I thought that gold needed to just rally before it went lower. And so I advised putting a limit order to try and catch a rally, and just snuck out an entry order at the $1,695 area. I think gold rebounded to about $1,697. So it's very tricky to place a limit order. You never know how much, it's going to rebound before it goes back down. But we were right on the spot there. And, those of you who took my trade should be short at $1,695. And now we're trading at about $1,675. So gold has crashed about $20 or 200 pips since that order was triggered. Now, I think that there is a lot more room left on the downside in gold. And one of the things that I'm also focusing on is this kind of obscure chart called the gold-silver ratio chart, which measures the price of gold versus the price of silver. And the reason why I've been looking at it recently is because the price of gold relative to the price of silver has shot up to an all-time high. And I'm going to show you a chart. This is a 50-year chart of the gold-silver ratio, which you can see recently has shot up to the upper band of this 50-year trading channel. And the gold-silver ratio shot to about 114, which was way above the normal trading range for this ratio. And I am speculating that this ratio will contract, meaning that it will start going from the 114 lower. to 100 to 90, something underneath there. And if the gold silver ratio is going to contract, two things have to happen. Either gold needs to go down relative to silver, or silver needs to start accelerating relative to the gold price. And I think it's going to be the former. Meaning that gold is going to start crashing relative to the price of silver. So all of these things are kind of coming together in my mind based on all of this technical price patterns, the technical price action, the key reversal, the gold-silver ratio is all giving me a warm and fuzzy feeling that we're going to see lower prices in gold and perhaps much lower in the near term. So with that said, I wish you a healthy and prosperous trading day, and I'll see you next time.